Hi, I'm Richie Parsons, and today I'd like to talk to you about 4 investment themes or 4 things that may play out over the course of 2014 into 2015. Hi, Richie Parsons from 2020 Financial Planning here, and as I said, I'd like to outline to you today 4 investment themes that may play out over 2014. The first one is house prices. The Reserve Bank is currently concerned about house prices, more particularly Sydney and Melbourne, but they've been concerned about house prices rising due to low interest rates. What we're seeing is there's actually been some double-digit house price rises, more particularly in Sydney, but what we're finding is foreign buyers have actually invaded the market over here. More than 14% of new homes now are all being purchased by foreign investors, and about 10% of all established homes. And again, this is more particularly Sydney and flowing through to Melbourne. What this is doing is pushing up prices. Now, these are some of the things the Reserve Bank will be looking at. At the moment, they have interest rates on what they call a neutral bias. And if there's further price rises over the course of 2014, we may find the Reserve Bank may be looking at raising interest rates. Now look, it should be noted that house prices are not the only determining factor in looking at interest rates. The Reserve Bank will also look at inflation, the level of employment or unemployment, the level of the Australian dollar, retail sales and the like. In fact, only this week, Joe Hockey has fired a broadside to the Reserve Bank for them placing a neutral bias on their interest rate strategy as of the last Reserve Bank board meeting. The third thing to be having a look at is the United States of America and their quantitative easing, or QE program as it's called, and the rate that this will be diminished or will cease probably over sometime over the 2014 or 2015 year. Now, for the last few years, the US Federal Reserve has effectively been injecting $85 billion a month of liquidity into the US financial system underneath their quantitative easing program. In recent times, this has been pared back at the last 2 Federal Reserve meetings by $10 billion each, so now the QE program is only $65 billion a month. What this means is good news. It's showing that the real US economy is growing and low interest rates is actually getting some traction over there. So we'll probably find that this QE program will cease entirely, and it's likely that the US will increase their short-term interest rates sometime over the next 12 to 18 months, which are effectively zero rates at the present point of time. We could see with this that world economic growth becomes more synchronised, with increases from USA, Japan, and yes, even the Eurozone from some parts, and perhaps, as I said before, a slower economic growth rate, perhaps a more sustainable economic growth rate from China. The last thing I wanted to talk about is geopolitics. Geopolitics will never go away. And as we've seen in recent times, the Russian liberation or annexation of Crimea, depending on what your political persuasion, has dominated media in the press. Geopolitics is always something that can destabilise investment markets. And we've seen this before, whether it's the Middle East, Europe, whatever it happens to be. In fact, if you think about it, it was only less than 12 months ago the Korean Peninsula issue raised its head again. But did the media report that only in March of this year that both the North and South Koreans traded gunfire? All and any of these issues that I've raised may have short-term impacts on investment markets. But look, overall, underlying economic fundamentals are still sound, and well-managed businesses will continue to prosper. Businesses that have good franchise, cash flow, profit profile, and good market positions will continue to grow over time, and we deliver what we believe to be sustainable profits into the future. Any questions, please feel free to email me, or come back to me via our website, or you can also subscribe to our YouTube site. Anyway, thanks for listening. Bye for now.